You've been told to max your 401k, ride the market, and just hope taxes don't crush your retirement. But what if there was a better way to build a multi-million-dollar retirement account? One the IRS cannot touch. A strategy used by wealthy for decades, IRS-approved, crash protected with a 0% floor, and lets you borrow your gains tax-free before 59 and a half. No income limits, no penalties. And yes, it's life insurance. Just not the kind your parents had. Stick with me for the next few minutes and you'll discover how to grow your money tax-free with zero market losses, why the IRS legally lets you pull six figures a year without a 1099, how to escape the looming retirement tax bomb inside your 401k and IRA, the little-known strategy that turns life insurance into a tax-free retirement machine, and how one real client is on track to generate over $4 million in tax-free income with just $3,000 a month in contributions. If you're earning over $150,000 a year and already maxed out your Roth, this could be the most powerful wealth strategy you haven't heard of yet. Hi, my name is Robert Balgach. I'm a founder and CEO of Black Swan Insurance Group, and since 2017, we've helped over 20,000 high-income professionals, doctors, tech executives, attorneys, build tax-free retirement strategies using properly structured IUL policies. And here's what we see time and time again. Even the smartest professionals earning $150,000, $300,000, even $500,000 a year still feel financially exposed. They're maxing out 401ks, stacking backdoor Roths, buying term life insurance. And yet, something is still off. And that's because traditional retirement plans are like renting your future from the IRS. You build the account, you take the risk, but when it's time to retire, Uncle Sam sets the rent. Now imagine the alternative. A properly structured IUL is like owning a private vault. Your money grows tax-free, you can access it before 59 and a half, penalty-free, and it passes to your family with zero income tax. You own it, you control it, and the IRS, they don't get a key. That's why what we are unpacking today, real numbers, real strategy, and zero hype. So let me guess, you got a 401k, maybe a Roth, a term life policy, and you're dollar cost averaging into the market every month. That's what you were told to do, right? Max out your tax-deferred accounts, buy low-cost index funds, trust the process. But here's what no one tells you until it's too late. That entire plan rests on two assumptions you can't control. Number one, that taxes will be lower in retirement. And number two, that the market will cooperate when you need it the most. It's like planning your dream road trip, but letting the IRS pick the gas prices and the stock market decide when you get a flat tire. If you're earning $150,000 or more and stashing your wealth in a 401k, you're not saving for the retirement. You're building a future tax bill. And the higher your income, the bigger that bill becomes. Most people believe you have to invest your money, ride ups and downs, and just hope you come out ahead. But with a properly structured IUL, you're not investing in the market. You are linking to it. So when the market goes up, you earn index-based interest, typically capped around 9 to 12%. When it crashes, you don't lose a dime. And that's the power of the built-in 0% floor. No losses, no panic, just protection by design. Picture two elevators. One is tied to the stock market. It rockets up, then plunges without warning. The other, it's an IUL, our smart elevator with a built-in safety lock. It only goes up. When the market goes down, it pauses, never drops. Then it goes up again, pauses, goes up again. And your cash grows during the good years and simply waits out the bad ones. Now imagine locking in gains like that every year and never giving them back. If your portfolio drops 20 to 30% in 2022, this is your wake-up call. You don't need to gamble to grow. You need a smarter structure. By the way, if you're watching this and wondering, could this actually work for me? We built something just for that. It's called the IUL Custom GPT. Your personal IUL strategist, available 24/7. Just enter your income, age, your goals, and it's going to model what's possible based on your unique profile. And instantly gives you custom insights. No guesswork, no sales pitch. Think of it like having a top-tier IUL expert in your pocket without the consultation fees or the calendar hassle. Try it now. The link is in the description. It's completely free. And in less than 60 seconds, you'll see exactly what this strategy could look like for you. Here's the strategy most CPAs and financial advisors never mention. With a 401k or IRA, every dollar you take out in retirement is taxable income. It's not just your money, it's yours and the IRS's. And their cut, you won't know it until it's too late. But with a properly structured IUL, you don't withdraw your gains, you borrow against them. And under IRS Code 7702, those policies, loans are not considered income because they are loans, not distributions. So just imagine owning a fully paid off building, and instead of selling it and paying taxes, you walk into the bank and borrow against the equity. The cash is tax-free, you keep the building, and it keeps appreciating. That's how an IUL works. You keep full ownership, your policy stays intact and growing, and the IRS, they never get a cut. And this isn't fringe. It's the same strategy used in executive bonus plans, bank-owned life insurance, and even pension systems. And now imagine pulling $100,000 per year, tax-free, for the next 30, 40, even 50 years, without ever reporting a dime to the IRS. It's not a fantasy, it's a design. And it's only possible with a properly structured IUL. Let's have a real conversation about fees, because this is where most people get misled. And you probably heard it. IULs are expensive, term is cheaper. Just buy the term and invest the rest. And that sounds smart until you actually run the numbers. Yes, IULs have internal costs, especially in the early years. Cost of insurance, administrative fees, premium loads. But here's what most people miss. These costs shrink over time, and you're not paying them forever. Now compare that to your 401k or brokerage account. 1 to 1.5% assets under management fees every year, hidden fund costs, tax drag on growth and withdrawals, zero downside protection. Over 30 years, these fees can stack up to quietly strip away 30 to 40% of your retirement. Think of building an IUL is like installing solar panels. Yes, there is an upfront cost, yes, but once it's in place, your future cash flow becomes predictable, efficient, and largely immune to rising costs. So the question isn't really what are the fears in year one. The real question is, what's the lifetime value of the taxes, losses, and advisor commissions? If you could trade in 5% front-end cost for decades of tax-free income and $500,000 tax-free legacy, would you? Let me introduce you to Michael. He's 45 years old, married, 2 kids, one in 9th grade, the other one in 6th. He's a senior product executive at a fast-growing technology firm in Austin, Texas, earning just over $300,000 a year. And he's smart with money. He maxes out his 401k, he contributes to backdoor Roths, he carries a term life policy, and he holds a diversified ETF portfolio. And on paper, he's doing everything right. But here's what kept him up at night. What if the tax rates double by the time I retire? What happens if the market crashes right before I need income? Why do I still feel exposed, even though I followed all the rules? Now, before I show you all Michael's actual numbers, I'm just curious, what's your biggest concern about your current retirement strategy? Is it taxes, market crashes, or something else? So please let me know in the comments, because I'll address the most common concerns in the upcoming videos. We ran the numbers for Michael, and here's what we designed. Contribution, $3,000 a month, or $36,000 per year, funded for 20 years, with the total contribution of $720,000. At age 65, his cash value is projected to grow to $1.16 million, and he's structured to generate $101,000 per year in tax-free income. And that income lasts for 40 years through age 104, if he makes it. So the total projected tax-free income is over $4 million. And even the remaining death benefit at age 104 is almost $500,000, passed tax-free to his family. For Michael, this isn't just another account. It became a vault, a private financial engine, quietly compounding tax-free in the background until it was time to flip the switch. Compare that to his 401k. Every dollar is taxed, forced, required, maximum distributions, RMDs, full market exposure, no guaranteed legacy, while his IUL, no tax, no penalty, no government strings, and complete control. So Michael didn't abandon his 401k. He just stopped betting his future. If you're earning over $150,000 a year and your entire plan relies on tax-deferred accounts that haven't been taxed yet, maybe it's time to see what's actually possible. So if you made it this far, chances are you already know traditional retirement plans just aren't built for people like you. You're earning well, you're saving aggressively, and the higher your income, the less the traditional model works. And if you're still relying on 401ks, IRAs, or market-tied assets alone, you're building your future on someone else's terms. This is your chance to flip the equation. You can book a free tax-free wealth strategy session with our team and get a clear breakdown of how much you could lose to taxes under your current plan, a custom design IUL, structured the way the wealthy would do it, and clarity on how this strategy could unlock tax-free income, liquidity, and legacy for life. We don't pitch, we educate. And we've done it for over 20,000 professionals. Just like you. Still thinking it over? I get it. This isn't the decision you want to rush. It's the one you make with full clarity. That's why I want you to watch this next video, IUL pros and cons, the truth about tax-free life insurance. We break down the good, the bad, and the misunderstood. Tax-free income, downside protection, and liquidity, alongside with fees, caps, and surrender charges most agents go so. So if you ever felt like no one's giving you the full picture, this is where that changed. And if your current advisor has only shown you the risk of an IUL, but never the rewards, they're not protecting your wealth. They're protecting their business model. And remember, it's not what you made, it's what you keep. Enjoy the ride.